Welcome to Department of Distance and Continuing Education, University of Delhi, Masters of Business Administration, Semester 1, Core Course MBA FT 6104, Accounting for Managers. Lesson 6, Cash Flow Statement. 6.1, Learning Objectives. After reading this lesson, students will be able to understand concept of cash flow statement, objective of Ind AS 7, significance of cash flow statement and classification of activities, meaning of cash and cash equivalent and its components, how to prepare statement of cash flows or cash flow statement, how to report cash flows from operating, investing and financing activities, how to treat investments in subsidiaries, associates and joint ventures while preparing cash flow statement. 6.2, Introduction. Financial statements of a company as per Companies Act 2013 includes balance sheet, statement of profit and loss, cash flow statement and notes to accounts. The balance sheet is a blueprint or summarized sheet of entity's financial position in the form of resources, that is assets, equity, shareholder funds and outside obligations, sources of financing resources, at a particular point of time, which is the end of accounting period or reporting date, that is 31st March of the accounting year, and the income statement or statement of profit and loss, which reflects the financial performance or results or profit or loss during the accounting period. The financial statements as per the provisions of the Companies Act 2013 are to be prepared on accrual basis of accounting. Financial statements does not separately indicate the inflow and outflow of cash and cash equivalents. It is the statement of cash flows which shows the inflow and outflow of cash and cash equivalents from three activities of any business organization, which are operating, investing and financing activities separately, and does not account for or considers transactions which do not involve cash receipts and payments. Cash flow statement shows how much cash and cash equivalents are generated or used by a particular activity, which can be operating, investing and financing activities. Every business organization, whether small or big, manufacturing or trading or service organization, requires cash for financing the operational expenses and assets for running its business, and to provide funding investments in the form of mergers or acquisitions. Cash is also required to pay dividend, interest and repay loans and borrowings. Therefore, every business enterprise should generate the cash continuously to make payments. Even banks and financial institutions deals with financial products, accept deposits and give loans. Therefore, should also generate cash profits to make payments on time and to finance investments in new branches and launch new products. Therefore, statement of cash flow is also essential for banks and financial institutions. 6.3, Meaning of cash flow statement or statement of cash flows. Cash flow statement or statement of cash flows is a statement showing how the cash is generated by an entity during a particular accounting period and how it is applied or used by it in that period. It classifies inflows and outflows of cash and cash equivalent in three activities: operating activity, investing activity and financing activity. 6.4, Objective of cash flow statement. Cash flow statement serves the following objectives: to provide information on changes in cash and cash equivalents from different activities, to evaluate the ability of the organization to obtain cash and cash equivalents to make payments for financial obligations, to show the timing and certainty when cash and cash equivalent can be generated or utilized in future to prepare cash budgets. 6.5, Benefits of cash flow statement. Significance of cash flow statement can be understood with the help of following points. Provides information about changes in net assets and financial structure, that is liquidity and solvency. provide measure on the ability to manage the cash and cash equivalents, assess and compare the utilization and generation of future cash flows from different activities, act as a tool to compare the efficiency of different entities in the same industry. 6.6 Scope of Ind AS 7 Statement of Cash Flow. Companies following Ind AS based financial reporting framework shall prepare statement of cash flows as per Ind AS 7. Ind AS 7 prescribes rules and provide guidance on preparation and presentation of statement of cash flows showing the inflow and outflow of cash and cash equivalents from operating, investing and financing activities during a particular accounting period. Statement of cash flows should also become an integral part of financial statements. 6.7 Some important definitions as per Ind AS 7. Some of the definitions which are important while preparing statement of cash flows are as follows. Cash refers to the sum of cash in hand and demand deposits with banks and financial institutions which are repayable on demand. Cash equivalent. These includes marketable securities or are investments which are short-term, highly liquid and can be readily converted into certain value of cash or money and are subjected to a very low risk of changes in their value due to the market price fluctuations. Cash flows refers to both inflows and outflows of cash and cash equivalents from operating, investing and financing activities during a particular accounting period. Operating activities. These activities are concerned with the principal and main revenue generating operations of the business organization and have no relation with the acquisition of fixed assets or fundraising activities. Investing activities. These are the activities which are concerned with the acquisition, purchase or construction and sale of long-term tangible and intangible fixed assets and investments and related earnings from such investments such as dividend received, rental income and interest income. Financing activities are activities that are concerned with raising funds, repayment of funds raised and the payment of dividend and other fixed financial charges such as interest, preference dividend. These activities are related to capital structure, that is size and composition of equity and external borrowings. 6.8 Cash and cash equivalent and related issues. Now let us understand the meaning of cash equivalents. Cash equivalents include the marketable securities and are investments which are short-term, highly liquid and can be easily converted into certain value of cash and are subjected to an insignificant risk of changes in their value due to market price fluctuations. Some of the points to be considered in relation to cash equivalents are as follows. Purpose. Held for meeting short-term cash obligations rather than for long-term strategic investment purposes. Liquid and insignificant price fluctuation risk. Investment to be considered as cash equivalents. They must be readily convertible into certain amount of cash without any significant risk of changes in their value and they must have short maturity up to 3 months from the date of their acquisition. Non-equity investments. These are not considered as cash equivalents unless they have very short maturity, such as preference shares purchased having maturity of less than 3 months from the date of their acquisition. Bank borrowings and bank overdraft. Considered as outflow and inflows in financing activities, bank overdraft repayable on demand are considered as negative cash and cash equivalents. Cash management. Cash flows does not include movement among cash or cash equivalents as these are the part of cash management. That is, investment of excess cash in marketable securities to earn additional income rather than operating, investing and financing activities. 6.9 Presentation of Statement of Cash Flows. As per Ind AS 7, Statement of Cash Flows shall present and report cash flows, both inflows and outflows of cash and cash equivalents during the accounting period into 3 activities: operating activities, investing activities and financing activities. Let us understand each of the activities in detail. Operating activity. These are the principal and main revenue generating activities of the business organization and are not related to investing or financing activities such as sale of goods in cash, receipt of cash from debtors, cash payment of salaries and rent, etc. Some of the examples of inflows and outflows of cash and cash equivalents from operating activities is given below. Cash inflow from operating activities. Proceeds from sale of goods and provision of services in the ordinary course of business. Cash receipts from income such as royalties, fee, interest income, commission and rent received. Cash receipts from insurance claims, refund of income tax. Cash outflow from operating activities. Payment made to suppliers for purchase of goods or availing services from the suppliers. Cash payment for revenue expenses such as electricity, repairs, etc. Cash payment to employees and workers in the form of salary and wages. Cash payments of income taxes unless they belong to financing and investing activities. Cash payment of indirect taxes such as GST and custom duties. Some important issues to be considered while determining inflows and outflows of cash and cash equivalents from operating activities. Number 1. Profit or loss on sale of fixed assets or property, plant and equipment. Profit or loss on sale of fixed asset is transferred to statement of profit and loss of period in which sale transaction took place. The cash flows from such sale are treated as cash flows from investing activities and not operating activities. Number 2. Construction or acquisition of investment properties for let out purposes. Cash payments for expenditure on construction or acquisition of investment properties held for rental to others and for resale are treated as cash flows from investment activities. Number 3. Financial institutions and banks. Financial institutions and banks usually holds securities and loans for trading purposes, same as inventory held by other businesses for resale in the ordinary course of business. Thus, cash flows from purchase and sale of such securities is treated as cash flows from operating activities. Similarly, cash advances and loans by financial institutions and banks are treated as cash outflows in operating activities because they are considered as principal revenue generating activities. Investing activity. These are the activities which are considered with the acquisition and disposal of long-term assets and investments and earning from such investments. Some of the examples of inflows and outflows of cash and cash equivalents from investing activities is given below. Cash inflows from investing activities. Proceeds in cash from sale of fixed assets or property, plant and equipment, intangibles or intellectual property rights and non-current assets. Cash proceeds from sale of investments in equity shares or debentures or of other entities and interest in subsidiaries, associates and joint ventures. Cash proceeds from the repayment of advances and loans given to directors, intercorporate deposits. Cash proceeds from derivative contracts such as futures, forward options and swaps. Investing cash outflows in investing activities. Cash payments to acquire or construct fixed asset or property, plant and equipment, intangibles, intellectual property rights and other non-current assets. Payment towards capitalized research and development costs. Cash payments to purchase or invest in equity or debt instruments of other entities or to invest in equity interests in subsidiaries, associates and joint ventures. Cash advances and loans given. Cash payments for investment in derivative contracts such as future, forward options and swaps. Financing activity. These are the activities that are concerned with the acquisition and disposal of funds and the payment of fixed financial charges. These activities are related to changes in capital structure, that is size and composition of equity and external borrowings. Some of the examples of inflows and outflows of cash and cash equivalents from financing activities are given below. Cash inflows from financing activity, cash proceeds from issuing shares, share warrants, call money received, issue of preference shares, secured premium notes, cash proceeds from issuing public deposits, debentures, loans, notes, bonds, mortgages, etc. Cash proceeds from short-term or long-term borrowings, loans from banks, loans from related parties or other corporates. Cash outflows from financing activity, cash payments to buy back equity shares or redeem preference shares, cash repayments of loans and advances taken, redemption of debentures, cash payment towards settlement of liability under financial lease. 6.10 Reporting of cash flows from operating activities. Cash inflows and outflows arising on account of operating activities can be reported or and accounted for in the statement of cash flows by applying one of the following methods. Number 1. Direct method. In this method, broader groups of cash receipts and cash payments are reported, showing only cash payments and receipts. No adjustments are made for increase or decrease in current assets and current liabilities, non-operating incomes and expenses. Indirect method. In this method, profit or loss is adjusted to account for non-cash transactions, working capital adjustments including increase or decrease in current assets and current liabilities, non-operating incomes and expenses, financing nature payments such as interest or dividend payments. Question. Find out the cash flow from operations by direct method and indirect method from the following information. Operating statement of ABC company for the year ended 31st March 2022 is given below. Particulars and amounts in the column. Sales 5 lakh, less cost of goods sold 3 lakh 50,000, administration and selling overheads 55,000, depreciation 7,000, interest paid 3,000, loss on sale of fixed asset 2,000, profit before income tax 83,000, income tax 30,000, profit after income tax 53,000. Balance sheet as on 31st March. Balances of the 2023-22 are given in the second and the third column respectively. Equity and liabilities, shareholder funds 60,000, 50,000. Non-current liabilities 25,000, 30,000. Current liabilities, we have creditors 12,000, 8,000. Creditor for expenses 10,000, 7,000. Provisions 8,000, 5,000. Total 1,15,000 and 1 lakh. Assets, fixed assets 75,000, 65,000. Investment 12,000, 10,000. Current assets, inventories 12,000, 13,000. Debtors 10,000, 7,000. Cash 6,000, 5,000. Total 1,15,000 and 1 lakh. 6.11 Cash flows in foreign exchange or currency. Ind AS 7 provides following guidance on cash flows arising in a foreign currency. Cash flows arising in a foreign currency shall be accounted for by converting it to functional currency of the business organization by using exchange rate between the functional currency in which the entity present its financial statements and the foreign currency prevailing at the date of inflow and outflow of cash as the case may be. For example, cash received from export sales in US dollar on 15th March 2023, the company prepares the accounts in Indian rupees. Exchange rate between USD and rupee as on 15th March 2023 will be taken for translation of export proceeds into Indian rupees. Cash flows from foreign subsidiary such as loan to or by subsidiary or repatriation of profits from subsidiary in a foreign country shall be converted into foreign currency at the exchange rates prevailing at the date of cash flows. If there is any gain or losses which are not realized and which occur due to fluctuations in exchange rates are not considered as cash flows However, effect of such exchange rate changes on balance of cash and cash equivalents held in a foreign currency must be accounted for in statement of cash flows so as to reconcile the opening and closing balances of cash and cash equivalents. This amount of effect must be reported and presented separately from cash flows from operating, investing, and financing activities. 6.12 Non-operating inflows, interest and dividend. Non-operating cash inflows such as cash flows from interest and dividend received or paid shall each be disclosed separately in the statement of cash flows. Cash flows from interest and dividend received or paid shall be classified as follows. The classification and treatment for financing company is shown in the second column, and for the other than financing company shown in the third column. Interest paid. Cash outflows under operating activities. Other than financing company, cash outflows under financing activities. Interest and dividend received. Cash inflows from operating activities. Cash inflows from investing activities. Dividend paid. Cash outflows under financing activities. Cash outflows under financing activities. Question. A firm invests in a 5-year bond of another company with a face value of rupees 10 lakh by paying rupees 5 lakh. The effective rate is 15%. The firm recognizes proportionate interest income in its income statement throughout the period of bond. Based on the above information, answer the following question. How the interest income will be treated in the cash flow statement during the period of bond. On maturity, whether the receipt of rupees 10 lakh should be split between interest income and receipt from investment activities. 6.13 Taxes on incomes and gain. Cash flows on account of payment or refund of taxes on income shall be separately reported and treated as cash flows from operating activities unless they can be specifically identified and attributed to financing and investing activities. However, the related tax cash flows are usually very difficult to identify and may occur in a subsequent accounting period, different from the accounting period in which the cash flows relating underlying transaction occurs. Therefore, for the sake of ease, taxes paid and refunds of income taxes are usually treated as cash flows from operating activities. Cash flows arising from payment and refund of taxes on income are classified as cash flows from operating, investing, or financing activities in the statement of cash flows. However, where it is feasible and easy to identify taxes and refunds with individual investing, operating and financing activities, then cash flows on account of tax payment or refunds are treated as cash flows from investing or financing activities as the case may be. For example, ABC Limited paid an advance tax of rupees 10,60,000 during the current financial year, including rupees 30,000 as tax on long-term capital gains. Outflow of rupees 10,30,000 will be treated under operating activity and outflow of rupees 30,000 will be treated under investing activity. 6.14 Investment in subsidiary, associates and joint ventures. If there is any transaction relating to investment in an associate company, joint venture or subsidiary which is accounted as per the equity or cost method and the business which acquires restricts its accounting and reporting in the statement of cash flows by considering the cash flows only between itself and the investee. For instance, only transactions relating to dividends and loans and advances between investor and investee are accounted for in the statement of profit and loss. 6.15 Changes in ownership's interest held in associate subsidiaries, joint venture and other business arrangements. Let us consider some of the issues relating to changes in ownership interest held in associates subsidiaries, joint ventures, and other business arrangements, and how they are to be dealt while preparing statement of cash flows. Number one, if there is any transaction relating to obtaining or losing control or equity interest in associates, subsidiaries, joint ventures, and other businesses, the cash flows from such transactions shall be reported separately and treated as cash flows from investing activities. Number two, following disclosures shall be made with respect to transaction involving obtaining or losing control or equity interest in associates, subsidiaries, joint venture, and other businesses. Amount of total consideration paid or received. Portion of the consideration paid in cash and cash equivalents. The amount of cash and cash equivalent in associate company, subsidiaries, joint ventures, and other businesses over which control is obtained or lost. Amount of asset and liabilities other than cash and cash equivalent in associates, subsidiaries, joint venture, and other businesses over which control is obtained or lost. Number 3. Aggregate amount of cash flows on account of obtaining or losing control or equity interest in associate, subsidiary, joint venture, and other businesses shall be presented separately as a single line item along with separate disclosure with respect to asset and liabilities acquired or disposed. The cash flows effects of the losing control are not deducted from those of obtaining control. Therefore, net cash flows effect is to be reported. Number 4. If there is any transaction relating to changes in ownership interest in a subsidiary that does not result in a loss of control, then cash flows arising from such transactions shall be treated as cash flows from financing activities unless the ownership interest is held by an investment entity where ownership interests are measured at fair value through profit or loss as per Ind AS 110. 6.16 Non-cash transactions. Let us consider some of the issues relating to non-cash transactions and how they are to be dealt while preparing statement of cash flows. Number 1. Investing and financing transactions that do not involve the usage of cash or cash equivalents such as purchase of machinery by issuing shares to the vendor, conversion of preference shares into equity shares on maturity shall not be considered while preparing a statement of cash flows as there is not inflow or outflow of cash and cash equivalent. Number 2. However, disclosures for non-cash transactions shall be made in the financial statements so as to provide relevant information to the users. Number 3. Non-cash transactions do not affect cash flows, however, they can cast a significant influence on capital structure and asset composition of the business. Number 4. Some of the examples of non-cash transactions are as follows. Acquisition or purchase of assets against issue of security instruments. Conversion of one form of security instrument into the another. Sale of goods against cancellation of a liability. 6.17 Summary. Cash flow statement is a statement which shows how the cash and cash equivalent are generated and how it is applied in different activities, operating, investing, and financing by an entity during the particular accounting period. Cash refers to the sum of cash in hand and demand deposits with the banks and financial institutions which are repayable on demand. Cash equivalents are short-term, highly liquid investments which can be readily converted into certain value of cash or money and are subjected to a very low risk of changes in their value due to market price fluctuations. Cash flows refers to both inflows and outflows of cash and cash equivalents from operating, investing, and financing activities during a particular accounting period. Operating activities. These activities are concerned with principal and main revenue generating operations of the business organization and have no relation with acquisition of fixed assets or fundraising activities. Investing activities. These are the activities which are concerned with the acquisition, purchase, or construction and sale of long-term tangible and intangible fixed assets and investments and related earning from such investments such as dividend received, rental income and interest income. Financing activities are activities that are concerned with raising funds, repayment of funds raised, and the payment of dividend and other fixed financial charges such as interest, preferred dividend. These activities are related to capital structure, that is, size and composition of equity and external borrowings. Thanks for listening the lesson.